The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman for this first trading day of the new year, 2015. Happy New Year to everyone. Hope it's going to be a really healthy and successful year for all the listeners. And of course, what we're looking at here is a very interesting phenomenon, because for the last trading day of the year of 2014, suddenly the markets took a dive late in the day, and I've always held this belief that during vacation periods, which this is one of them, when the boss is away, when the captain is out, the children will play. And what very often happens is, within the context of a larger trend, just very short term, because the word that's given to the sixth mate or the chef, whoever it is, who is now steering the ship while the captain's out there playing, the rule of thumb is don't underperform the S&P while I'm away. You don't have to beat it. Just don't underperform. And very often what happens is, if there's a push to higher, you'll suddenly see a flood of money coming in. If there's a push lower, a flood of money going out. So, in a sense, these 3 days between Wednesday, today, Friday, and I might mention while I'm thinking of it, I will be doing Daryl's show at 1 o'clock today. So today's Technical Friday. We can get into a lot of the technicals that I'm looking at. And one of the reasons why I'm looking for slightly higher highs over into the middle of January, unless something happens, and I'll discuss that. So let's go back to our story. Within the context of these 3 days, we'll have Monday as the start, the real start. And it's so crazy. This is a Friday, the last day of the week. It feels so weird to think that this is the first trading day of the year. It should be Monday, right? Well, it isn't. It's today. So the weekly charts are going to be showing one thing. Monthly charts are going to be showing something else. And it's going to be quite fascinating, because we will see if in the first week or two, there are new highs in the Dow and the S&P. That's going to be really important in my work. And if it starts to fail, the big sell-off that I was thinking would come middle to maybe late January might have started. And I'll have to explain what would be happening in the weekly charts if that's the case. However, in the meantime, back at the ranch, let's just do this. I'm going to do the numbers, and since it's the last day of the week, first day of the year, trading day of the year, I'm going to do it a little bit slower, and I will have another hour later on when I do Daryl's show. So here's my assessment of the charts. And it's fascinating to me, because let me go back here just to show you something. This is what I show my subscribers every day. I've drawn in this arch formation, and I've drawn this cup formation. This is the 120-minute Dow chart, and this is the 120-minute VIX, the volatility index chart. And what I said to subscribers is, I'm suspecting this is when we were about over here, right there. Let me just draw a nice yellow line so that you know what I'm talking about. Right there. Okay, grab that. We're around about there. And I said to subscribers, I suspect that the volatility index is going to climb as the stochastic pulls back. But I didn't think it would climb that high, and I certainly didn't think it would get to the 19s. Not in this particular move. So this is almost the same as we were looking at when we were looking at the Dow and the S&P, and I should say in the general market, because if you've got your second, third, and fourth tier level money fund managers in or assistants in the driver's seat, and they're not wanting to miss out on anything. When the market ran up, they went with it, and then the moment it started turning down, they started to run with it. The fact that the market gave back all those gains, and that the futures last night were up 10, early this morning they're up about 5, then they went back to about up 10, 11, and now I've given it back, and the futures are down 8.75 at 2,043. The E-minis, the March E-minis, the S&P is down 8.40 at 2050. The S&P is down 30. The S&P is down 850 at 2050. The Dow is down 34 now at 17,088. And let me just run the numbers as I'm doing, because it all relates to what I'm looking at right here. So let me just get back to this. And the comp index is at this particular point, the comp index is down, I'll tell you in a minute. The comp index, very broad, is down 34 at 47.01. Gold, Tom gave a great assessment of gold earlier on, and a tremendous play on the upside, nice turnaround. And gold went from down $12 or $14 to, at this particular point, I'm a little behind, but I think it's close. It's up 6 at $11.90. Silver has also turned around. It's now up 29 cents at $15.98. Bonds are up $1.04. This is extraordinary. And maybe before I forget to do it, let me go right there now. This is a U.S. This is a continuous contract. Look at that huge move up. And this is what we were talking about on Wednesday when I gave an assessment of what we were discussing at the meeting I had on Tuesday night that I was the presenter. And we discussed how bonds were holding so beautifully, and that as I could see it, the 30-year yields, T-bond yield, the 10-year T-bond yield, and the 5-year T-bond yield, I can go there right now because it's kind of important. So they were showing that there could be, because of the arch formation, that there could be a test of the most recent lows. And look, there we are. The 26.76 was the low in the weekly chart of the 30-year T-bond futures from October the 17th, that turnaround day with the Dow, and on the 15th, all the indexes turning around to the upside, bonds turning around to the upside as well. Bond yields, that is. And that low, 26.77, is being tested right now as the low today is 26.79, 3 cents away or 4 cents away from breaking it. That is really interesting. And what I'd spoken about as well was that the dollar, in my interpretation, the dollar had actually made a leg B, not a D. And if the dollar looked like it would still go higher, lo and behold, we're in leg C now in the dollar, and that says it should still go to a leg D. Fascinating situation. The euro, EU, I was asked if I talk about the euro on Wednesday. I didn't really get much to it, and that's still going down. It's still in a leg E in the weekly chart, and that monthly chart now has broken key support. This is really important support, and that support is at that trend line, rising trend line. It broke it in December, and January now has gone to a lower low, and that means it could very well test the 1.2041 level in the euro-dollar currency pair that was made back in, I think, July of 2012. And the USD JPY moves very well with the dollar, and look at that. It's broken. I was talking to someone the other day, well, during the talk, we were going through these different currencies, and I said that this currency looks like it wants to retest the 124.13. This is the dollar Japanese yen currency pair. It wants to test the high of June of 2007 at 124.13 to make that cup formation. Oh, fascinating markets we have right here. Now, why am I looking at this as a potential for some kind of strength, when in fact there are a lot of factors that say we are so overbought that you should get a sell-off? Well, I was expecting the sell-off, and now let me go back to what I was talking about a moment ago. For my subscribers, this quintile of what we have is we have the Dow 120-minute chart, the VIX 120-minute chart, still now in leg D because it dropped sharply this morning. It went down from the 19s to the down to the 1705 level, and now is way back up. It's up 3.39 at 19.85. Now, I want you to put this correlation together. For the volatility index to go from 14 to 19.91, that's 5 points. That is almost a 30% gain. And whoops, just nothing. What, 30% gain? Yes. 5? Yes. It is an incredible feat. And the market has not yet broken the 17,700 or 600 area. If you had looked at this chart, well, if I had looked at this chart and I saw it, and you said to me, where do you think the Dow would be if on the day that the VIX made a low of 14.01 on the 24th of December, the Dow was at 18,000, somewhere around 18,061. I would have said, oh, man, you must be down to the 18,300, 18,200 area. Boy, I could be wrong on this. My suspicion is we're getting selling that this is two things that are happening. One is it's the selling that was left over because people were waiting for 2015 to take profits, and they had bought the volatility index before, back in December, as a kind of, they didn't want to sell their stocks, so they bought the volatility index. And they, meaning a slew of hedge funds and fund managers, they bought it as protection because they did not want to sell. Now they're doing some selling. So the volatility index, I always respect the price. Price is the arbiter of a trend. And I said this the other night. I said, in the 16s, be a little careful. In the 19s, you've got to start saying to yourself, maybe I need to sell something here if I've had some really good gains. And this is a weekly chart, so this Friday, today at 4 o'clock, where it closes is going to be really important. It's in the 19.89 area right now. If it goes even higher than that, it's already hit 20.14. You have no choice but to say, hey, I want a little bit of a cushion here. I want to take, I've had profits in this area. I need to take something off. But if the VIX index next week, a week from today, is holding in the 20s, the mid-20s, 23, 24, 25, then I would say time to be thinking of taking a little bit more off, because you'll have an opportunity to buy stocks back lower down. Now, let me tell you what I said to my subscribers this morning based on the Chapman Wave methodology. I've spent years and years and years on this volatility index, and I said it made a leg D, and if it's peak D, it's liable to pull back sharply, and you will get, the futures will hold their gains, and if the Dow is in the plus 50s, S&P's plus 7s or something like that later in the day, that's going to be very good. If the Dow reverses and goes to minus 50, S&P down minus 7s, that you got to be careful. But I have a mixed message here, and the message is, based on the VIX index, I'm anticipating some kind of sharp rally. We got that. But based on my Chapman Wave trend gauge, they had a high of 2.25 on Wednesday. The rule is, and maybe this is the first time in a year, or maybe even 2 years, maybe the second time in that period, that it'll fail. Normally you'd have a rug pull and go negative. And we've gone negative for both things. I'll be back right after this. Dow's down 39, S&P's 8. Basil Chapman, Tiger Conditions Hour.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So this is what I'm looking at here. Let me continue my theme. My anticipation was that because unless this is the weekly charts are making the pattern that we saw back in October of 2008. Why do I always forget whether it was 7 or 8? Let me just check that out. let me check that out. 2007, of course, where you got major sell-off in August, and then we ran up after that to a higher high, slightly higher high, and then you got that major collapse, the 50%, 51% collapse. Unless we're doing that, and I don't see it yet because the stochastic in the weekly chart of the Dow is at 87%, the MACD is still very strong. Even in the daily chart, the stochastic's at 84%, and the MACD just hasn't yet crossed negative. By the end of the day, it could. I am looking at this, and we've got it for my subscribers. We've got a mixed portfolio. We've got longs and we've got shorts. Now, it's very interesting because one of our shorts is up 53% or 40%, 0.40 right at this moment. It's up about 35% maybe since we got it. There's a long, another long is up today, 0.93%, and it's up from 134 to 147, 13 points, 10% or so right now. Another long position that we went in this morning, we got stopped out for a small loss, but I was attempting alongside. And a short side is down, so we're making money on the short side. And the option that we bought, which was up 30% or something like that at the close on Friday because it's so lightly traded. We got out this morning of part of the position with a small loss, and now it's up huge. It's up maybe 35. The rest is up about 35, 37% that's the put side. So I don't have a bias in terms of the portfolio in the sense that I'm looking at shorts, I'm looking at longs. But this is what I'm saying to myself, and this is what I discussed the other day. I said there's a chance. It's a little complicated to talk about now, but I want to talk about it because I said there's a really good chance, and I actually drew it in. I said there's a chance that we have a pullback here because of the monster move we had from the most recent low of just over 17,000 to 18,100, that we could pull back here and then have what I call an inside buy mode in the Dow. In other words, at this particular stage, when the captains come back Monday and Tuesday, that's where we're going to get a test of whether this thinking is correct or incorrect. Had a question in the agenda about discussed cyclicals, both consumer and heavy cyclicals. Well, this is going to be the test whether or not the autos, that kind of the heavy-duty cyclicals, are going to find strength to move higher, because normally over the Christmas period, that's where you kind of get weakness, especially going to the beginning of the year. People don't have too much money, they're not going to go buy these big capital goods. But in fact, there are really good deals out there. The auto show is going to be here in Boston in 2 weeks' time. I'm really looking forward to that. I think it's going to be spectacular for style as well as quality. I'm still mad as hell that the American autos are not coming up to par in terms of reliability, but it's way better than it was. But it should be there. They've had all this time, and I blame the unions more than anyone else. You should insist that the bosses, that the heads of these companies, all the way down from the very top, insist on the very best quality instead of the usual glitz and glamour of cup holders and things like that. Get it right. Let people start talking about buying cars that can really hold their value. And I'm hearing about, and the Consumer Report keeps talking about how Mercedes is having such terrible reliability in many of the cars. In fact, the more expensive cars are not doing all that well, and Audi has improved. So we're looking at a real mixed market. Toyota has kind of very good results, but a little bit less than it used to have. So this is a perfect time for America. Even, I don't care what the percentage of the product is made in America, I'm thinking American-named cars. That's what I'm thinking. And the styles have improved. Quality has improved in the interiors, but not enough. And you've got to see that. And you will see that this industry is going to just come alive. I mean, people are going to buy America, and that's American. And I've been waiting for that for 30 years here with GM and others. Okay, so let's just skip that for the moment. Let me come back to the Dow. So I'm anticipating, based on the 120-minute chart, which is very close to the 17,718 200-period exponential moving average. It's under the 9-period moving average, but the stochastic is really close to some kind of a bounce. Okay, so that's in my thinking very near term. I don't really care so much as I want to know what's happening on Monday afternoon and Tuesday. Whoa, that was the music already. Music's there saying I better just cut right now so we can have a commercial, very important commercial. I'll be right back. Now the Dow's only down 10, S&P's down 5. We'll see where we close the day. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back at a chunk of texts and emails about certain things, and I'd like to get to them all. There is time. I'll be also doing the 1 o'clock show. That is usually Daryl Martin's show. So let me do this. I got a couple of things that I want you to do. Just real quickly, I want you to just, so I don't forget, I want to actually say it right now. The SMHs are on a watch right now. That is the semiconductor index. I think they're having a tough time. It's one of the reasons why I think that the upside should go to new highs in the S&P and the Dow. It's not going to be very big. It's just nominal new highs to get to the weekly D, and then I think we get a really sharp pullback. I'm wrong if the Dow closes under that 17,600 to 17,500 key support. If it closes under that, we start to get that decline now, but I'm thinking double-digit decline coming later. Just a little bit more of a fuller rotation for the couple of weeks here, and then we go down. So I've answered a chunk of questions, and USO I will talk about a little later on what happens with oil. First, I want to go to Mike in Pennington, New Jersey. Mike, how are you?
I'm good. How are you doing today?
Very well, thank you. You'd like to look at
GoPro and AMBA. Amber.
So, as I understand it, is Amberella Inc., they have a relationship with GoPro, or do they have a relationship with Apple? I can't remember. They have a relationship.
They just make the chip that's in the GoPro camera, so they can
it's
sell
in
the chip
GoPro.
Yeah.
So I'm pleased you brought that up because I was about to mention this on Friday. Maybe I did. I don't remember. On Wednesday, because I had just taken in my racket for restringing, and my beautiful hollow core strings that I use, which nobody seems to use anymore, obviously, because they stopped making them. I had to get them online. And while I was there, I saw these cameras, and this is like, what is it, the day before? Wait, Wednesday. Was that after? Was it this week? No, it was earlier. It was earlier than that I was there, and maybe it was just after Christmas. So I thought it was appropriate for me to ask. So I said to the guy, "Hey, all those GoPro cameras." I said, "You selling a lot?" He said, "Last year we sold tons. This year not so many." I said to myself, "Wow, you know, this is anecdotal. To go and trade a stock based on one anecdotal report would be so stupid. But if you look at the chart of GoPro," and I'd said this to so many subscribers, they kept saying, "You wanted to go long GoPro, you wanted long, why aren't we long GoPro?" And I kept saying, because of the Christmas season, and the anticipation should have had GoPro up in the 90s, not in the 50s or 60s, and I suspect that something's going on, that there is just so much either competition, or people are just saying, do I really want to film every single thing that I mean, everything I do? I mean, really? Something's going on. And the chart is the arbiter of the trend. And as far as I can see right now, the chart is saying for GoPro, the pullback from leg A in the monthly chart is just way too deep. It's like a Roman candle, so you've got to be real careful. And the pullback in the weekly from only a leg B and then a peak B says we're taking too much time, and the best part of the buying period just seems to have gone. So now let's go to AMBA,
Right.
and look at the chart, and that's saying it's had a longer period of time than GoPro as an IPO. It's been out since 2012. In the monthly chart, it's gone from leg A to peak A, then peak B, a higher peak than A, then peak C, much higher than A, then leg D, which went to a peak D. That was in September, pulls back. Each time it held the 9-period moving average beautifully, that black line, and zoop, it goes to an E. And now we've started off January, the first trading day of January, a lot lower. Why? Because we're looking at a monthly chart, and the weekly chart already 4 weeks ago it made its high at peak D, and it's under the peak G high in the daily. So I'm looking at a chart that says, you know what? As a percentage trade, it's one of those where you say, you know what, I'm just going to go for like a 10-15% gain, and then I'm out. And if it keeps going higher, wonderful, I'll just raise the stop. And then what does it do? It just smacks you on the nose, and next thing you know, you've got yourself a 7% decline, then a 10% decline, then a 12% decline. And you say, oh, man, now I've got to hold the thing until it gets back. And then all of a sudden it wants to retest the most obvious left side low bar, which in this case is 44.45. And you say, oh, no, 15%, oh. And then it breaks that, and you say, now where's it going to? And it's an empty, it's a vortex. There's nothing there in support until umbrella gets down to the 35, 33s. I don't want to take that kind of risk. So I'm going to say, do you have any position now?
I have no position in GoPro, but I got call options on GoPro when it was 59.65, and then it popped the next day to like 68, or the next couple of days.
And did you take your profits?
Yeah, I had to because they were the weekly options. I had no choice.
Oh, well, you know, sometimes when you're forced to do something, that's the best way to do it, right?
Yeah.
So, okay, so now you're fresh and you're looking at this. You say, I've had some success. I'm going to try that again in the same area. It's maybe not the same stock, but the same area. What am I going to do? Would you be buying calls or would you be buying the stock?
Well, I actually still own 100 shares of AMBA. They're losing like $300 right now, and I have. I was looking at not doing anything really on GoPro or AMBA, except I was looking at an exit point on AMBA to see if it might go back up again, and that's what I'm
okay. So everything that I was talking about right now, you know, is applicable, right?
Yeah.
A small loss could suddenly turn into a bigger loss, and then you say, oh, man, now I've got to wait. So I'm going to make a recommendation. Look, you made some nice money on the position that you had in the calls. I'm going to make, and it's in the same area. So I'm going to say, why don't you do this and treat it almost as an experiment in style, an experiment in your trading personality, in your trading abilities. And I'm going to make the suggestion because the 200-period moving average is right here where it's at 50.01. It dipped underneath it again. This time it's trying its best to get above it. I'm going to make the suggestion that you use this as an experiment and you say, do you normally put a mental stop or a physical stop in your trading?
I use a mental stop, but I used to trade a few years back with using a physical stop, and I used to do much better with the physical stop.
Okay, and you know why? I mean, I didn't have to tell you about this. You know why, and the reason is that when it's physical, there is a non-emotional response. Afterwards, there's an emotional response because you say, "Oh, geez, what a pity." But I must tell you, I feel this all the time. If I make a mistake, I am out and done really quickly. And unless it's a position that I'm there and I'm doing it because I'm looking at an overall portfolio, and this is really an insurance, they're two separate things completely. The one is I'm prepared to take a loss, and a big loss, because it's a small portion, but it's a protection portion. And the other is where it is a short-term position, and I'm tired of this thing of making a small loss. Years ago, I used to do it not that often, but often enough to make me really upset. And then I'd marry the position, and I'd be stuck with it until one day it came back. And sometimes they just don't even come back. And then what really happens is that you sell it the very moment that if you didn't have this little trading god sitting there on your shoulder, waggling the finger and saying, "Nah, you should never have done that. I told you." I told like your mother, you know, "I told you not to do that." And then you got hurt. If you didn't have that, you would be saying, "This is where I want to buy it. This is where I want to buy it," not sell it. So now let's go through the psychology. The low that was made today, it opens at around number 52. It goes down to 48.87 and it's trading right now at 49.99. If you wanted to ask my personal opinion, and that's what you've done, I'm going to say to you, because you've got a position that's down 300, I would take the low of 48.87 today, and at least on a portion of what you've got, I'd be out if that's taken out. Personally, I'd be out the whole thing. In fact, I'd be out the whole thing right this minute saying, you know what, I can easily make up 300. I don't really want to make up 1,000 or 1,500, but I can easily make up 300. And if you're stuck with it, what happens is it sits there like baggage on your shoulder, and we're wagging the finger saying, I told you, you could have this, you could have that, you could have, and then it stops you from making lovely trades elsewhere. So I like to just clean the slate. It's like apologizing, saying, I was wrong. This is the situation. Let's go ahead fresh. So that's my thinking. I would definitely, in fact, I'd even say to you the low of this bar of 49.39, I wouldn't even wait for 48.87. And you know what? If you get taken out and suddenly it's trading at 51.50, you can reassess and say, you know what? I think I'll buy it back. I'll buy it back because I think it's going to go to a leg D rather than a C- failure in the daily. It's going to go over 56.01. You know what I'm saying? I'd rather think fresh.
It's in the semiconductor sector, and you just mentioned that's kind of weak anyway, the semiconductor sector, that whole sector.
Yeah, and the other thing about the semiconductor sector is this is a very important couple of days coming up. In the patterns that I'm looking at, I wanted to go short it. We did go short it at one point. I want to go short it again. But I said, you know what, I'm prepared to give it a little bit of room because it's part of the vernacular I'm looking at. The semiconductors, the biotechs. What's going to happen between today and Monday afternoon at 2 o'clock and Tuesday at 4 o'clock. That, to me, is absolutely imperative. So I'm just saying to you, keep your cash, $300. I know you can make up real quickly. I would not be hanging around too long.
You got time for one more?
I got some people waiting, so give me the names, and maybe in the next hour when I do Daryl's show, I'll get to it.
I got back in Cuba around 8:75 and 9:08. So.
Okay, great. So I'll try to look at it a little later on. Hey, thanks so much for calling, Mike, and good trade on your calls. So let's go to Larry and Cayenne. Hi, Larry. How are you?
Well, thanks for the year. I learned a lot. I appreciate it. I'm learning tons. So I wanted to call you about AMPE, if you can hear me.
Hello?
Yes. Now, wait a minute. AMPE is MPO Pharmaceuticals, Inc.
Yeah.
Now, someone came up with the stock in the biotechs the other day that I'd never heard of. No, it wasn't MPO, but it was also something close in rhythm. Okay, what are you doing?
Okay, so I'm watching this long consolidation, but on several methods, it's holding. It looks pretty good to me. I mean, I like the way it did a short covering a failure on the middle of October on the daily, and then of course, as you see, it's traced out an A, a B. It has to break over the 50 in that B point on some volume to get a confirmation, and the weekly looks really good. The monthly's lagging, obviously, but I don't know. I'm still new enough at this. I don't know what to do with it. My buddy at the gym is they're big into regenerative cartilage. And,
great!
It's a chronic treatment, yeah. So a skier buddy of mine, he's worn out his knees and he didn't want the implant, so he opted for this, and he's getting tremendous results. And they're using it in scleroderma for the collagen clouding of the eyes. I don't know. And look where
I had a long conversation. I actually had a great couple of days here talking to the only people that I ever talked to about stocks, and I've spoken to them about stocks for years and years, but most other people were not really talking about, no one was talking about stocks, so it was very interesting at all these different parties.
But really, Basil, what I'm thinking is as profit-taking occurs in the sector as we hit probably a 4-year cycle high this year sometime, I mean, they can run these little ones like with chump change real fast. I'm going to check into who's the operators in this thing. Doesn't it look like accumulation?
Okay, so we're talking about something very interesting. So I'm going to add one little thing to what I say. I'm going to not add it. I'm going to start off with it, and I'm going to say, Larry, one of the things you got to be careful if you are kind of not necessarily new to the stock market trading positions, but you're not necessarily new because you've been involved in looking at the market for years. There's a very big difference between a stock that's making a long sideways base that's at $30 or $300 and one that's at $361. So first of all, let me get that out the way. Now the other thing is, we were talking biotechs last night with a couple of physicians, and there are amazing stocks that are there. And this one person who's really smart said to me, you know what, I think that the lower, just exactly what you said, I think I spoke about this earlier in the week, that I think that the more speculative, low-priced biotechs are going to have a better run in January than the big biotechs. That's just my impression. I might be wrong. This fits right into that category. However, a stock that goes sideways between $3.20 and $3.65 for since December of even before that, since late November into this period right now, says it might be building a base, but it has to really break out. Otherwise, it's a rectangle pattern that can be very disappointing. So this is what I'm looking at. First of all, the fact that they're in an area that is going to be in huge demand if it's successful. I mean, huge is something.
Can I ask you a question when you get back?
Yeah, so let's do this. We've got a break coming up. I've got John Fully also waiting, but I'd like to get to this. We're looking at AMPE trading at $3.62, up 19 cents, and we'll be right back with Larry to talk a little bit more about it.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back, and we're looking at AMPE trading at 3.59. It's called MPO Pharmaceuticals, Inc. And so what we've got here is that Larry is looking at this. It's built a beautiful base, but my biggest problem is that stocks, especially biotech stocks, that are very low priced and have this cup formation that keeps on running and fading and running and fading and running and fading. This is a pattern that gets repeated to frustrate you until it finally breaks out. You want to be there when it breaks out, but you don't want to be there when it retests the low, because that low could be a breakout to the downside. But so far, it's constantly held the 322-ish area, and that's a big percentage away. It's 10% lower. Now, do you have a position, Larry?
No, I'm just going to do some fun. I'm just going to find out who's running this thing. And on the monthly, what's impressed me is it went to zero basically, and now it's got 4 waves up since 07.
Right, it went to a peak D in the monthly chart. All the way
and the ABC down is on lightning volume, and it just looks tempting. But yeah, I'm scared.
Okay, so can I make a suggestion? if this would be just a very small part of your overall portfolio, you could treat it a little bit like an option.
Yep.
So you could say, you know what, at 359, the high today was already 370. It's down a good percentage from the high. It's very volatile in terms of percentages, but there is a story there. For instance, this friend last night spoke to me about a particular stock. I remember seeing the name just recently, and I thought, wow, that's a very interesting. I remember the name. I don't remember the stock itself. I even remember maybe doing a chart analysis of it, but then I put it aside. And lo and behold, it spiked up huge today. And he said a patient told him about it, and he bought it, and it's done unbelievably well, but it's just a tiny percent of his portfolio. And that's the best way to do it, that you don't have to have a huge portfolio, but whatever your portfolio is, this should be a part of a speculative side. You know there's a story. The chart itself is saying, it could be stuck for a long time, but the nice part is that in the monthly and the weekly, it's closer to the lows than the highs, very much closer. In the daily, it's saying, I'm trying to build up strength. Today, the market's weak. I'm strong. I'm independent a little bit, so I'm going to make the recommendation that if you want, you could actually buy a little bit right now. Yeah. It doesn't have to be much. Just kind of get your foot in the door and say, you know what, it's a small part of my portfolio. I'm not going to do anything until I see how it holds $3.50 to $3.46 on any pullback between now and, say, Tuesday or Wednesday. If it's just held firm and it hasn't broken to the upside to $3.73, you say, hey, I'm not going to add to it yet. I want more evidence. But if you get a little nibble here, and then out of the blue on Monday or Tuesday, it's trading at 373, I would say to you, you could add just a little bit more, but be prepared that this thing has a big swing between the upper boundary and the lower boundary, but don't get carried away, because it could sit there for months. It's already sat there for months without doing very much. But this is the first time I'm seeing higher lows and slightly higher highs. I agree with you. I see much more signs now of an upside breakout potential than a breakdown potential, but that doesn't say it couldn't drop 30 cents or so to the 330 area. That's why start a little position, get your foot in the door, but know that this is a wait and see. You got to have a lot of patience. I hope that helps you.
As always, thanks for being there. Yep. Okay.
Thank you very much for calling. So, folks, we're about to wrap up, but two things I wanted to say. One is I'm going to be doing Daryl's Hour at 1 o'clock. That's number one. So that's going to be after Nico and Paige. And Nico and Paige has great information about your health, and I want to wish them both a really happy New Year and season's greetings and a healthy year. So, the other thing I wanted to say is, John in Philly had called me. We were going to talk about the VIX index. I want to give it a bit of time, so I don't want to rush it. I hope he calls back, but if he doesn't, I still will be talking about the VIX index, the semiconductors, and the IVB, the biotechs, when I get back at 1 o'clock. And we'll look at some 10-minute charts. I'll show you something interesting. Hey, I'll be back, so stay tuned, and see you later.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.